Ready to go? Okay. Welcome everyone to the public meeting of the Saskatchewan Rate Review Panel. I would like to first of all acknowledge that we are meeting in Treaty 4 territory. This is the original territory of the Cree, Saulteaux, Nakota, and Dakota and Lakota First Nations and the traditional homeland of the Métis. My name is Albert Johnston. I'm the chair of the Saskatchewan Rate Review Panel. The panel consists of 7 members from across Saskatchewan. Before we get going into the presentation, I'll outline the format. First of all, SaskEnergy will make their presentation, and following that there will be an opportunity for questions either from the floor or through our online facility. And please note as well that these proceedings here are being recorded and they will be posted on the panel's website. With that, I'll turn it over to Ken Fromm from SaskEnergy, who will give their presentation. Ken is the President and CEO of SaskEnergy, and I will turn it over to him.
Great, thank you, Al. It's my pleasure to be here today. As you can see from the screen, we're here to talk about the commodity rate application that SaskEnergy has put forward to the rate review panel for their consideration on our new commodity rate commencing on November 1st this year. Gonna have to look at this, see what it is. Hoping it's this one. Okay. There we are. Okay, thank you. So as I mentioned in the outset, this is about the commodity rate application. And if you ever look at your bill, it's your SaskEnergy bill, you will see that we have it split into 2 components, really. And those 2 components are quite fundamental to how we provide service to our customers. On the left-hand side of that pie chart, you can see commodity service. And again, because this is our commodity rate application, that is the area with which I will be talking about. The other side of the bill is about the delivery. That's how we get the gas to your home, to your business, and to the various industries. But this commodity, or this application, will strictly be on the commodity side. When I say commodity, what I mean by that is the actual molecule of natural gas, methane. I should point out to you that across North America, in fact probably throughout most of the world on a regulated utility, the cost of gas is a pass-through. What I mean by that is the amount of money that we spend on buying the gas on your behalf is exactly the same as what that charge is to you. So there is no profit or markup, there's no margin that is to be made on the natural gas itself. Now the gas itself is determined by the market. Markets have been around for the last 40 years on natural gas, and it's the supply and demand that drives the particular price. As you have seen likely in news media, the prices have changed. They go from high to low and back to high and low again, as is the same with any commodity. If you're looking at BNN News, you will see crude oil, you'll see the Western Canadian Select, and you'll see natural gas fluctuating from day to day as it does in the market price. Our customers have told us over the years that they prefer our rate, meaning that rate with which we will recover the cost of gas, not to vary quite as much as the price of gas does. You know, we could change it every month, or we could change it every quarter, but our customers have said to us, can you provide some level of rate stability so it's easier for us to manage our home accounts? So we do that. We do not set our rates monthly. Some utilities do. We do not set them quarterly. Some utilities do. In order to have a rate that's a longer term and yet is reflective of the cost of gas, we have to set up a variance because the price of gas can change continually. But we want a rate that is relatively flat for a certain period of time. Any differences that we have in the amount that we pay or to what we charge, that goes into an account. And that account can go to the customer's benefit, or it can be money that has to be turned back to the utility because that rate did not recover some higher costs of gas that were not anticipated at that time. All utilities set prices what we call prospectively, meaning this is our price for the next period of time until it changes. So I'm going to walk through that with you to talk about the rationale and what's behind the commodity rate application that we have here today. I'm not going to touch on the other side, which is our infrastructure. That's our delivery side. I'm not going to touch on that today, is specifically for the commodity itself. Getting right to it. Our rate application is asking for an increase in the commodity charge from its current rate of about $2 and it's $2.57.5 per gigajoule, and we want to go to the $3.15, and that is all reflective of the market. All reflective of the market because there can be no profit or loss in that. The impact to our customers on a residential basis is just over 8%. But that's still an increase, and we're here to talk about that increase and answer any questions on that. I should point out that the last rate change we made on the commodity was April 1st of 2019, when the rates were decreased from $3.65 a gigajoule to the current rate of $2.57.5. So as you can see, our rates can be stable for some period of time. Our rate needs to go up in order to reflect the increased prices that we are anticipating for the coming periods, but it is still significantly less than it was back in 2019. So it's kind of a good news, bad news. It's going up, but it's not at prices that have never been seen or managed before by our customer base. I mentioned to you that our customers have said to us many times that we want some rate stability. We don't want them fluctuating, certainly not day to day, and we don't want it month to month. So how do we go about doing that? Well, over the years, as the natural gas market has matured, we are able to forward price our purchases. We'll be able to forward price up to five years in advance or even longer. We're not here to speculate where prices are going. We want to systematically purchase gas in advance over certain periods of time to smooth out any variations. We're not here to beat the market. We're here to provide some rate stability. So what we do in our price risk management, as we call it, is to predetermine the price of about 95% of those purchases we must do in the winter. The thought behind that is that it's likely that the price volatility to the upside, meaning higher prices, would occur in the winter periods when natural gas is in very high demand and extremely cold weather can cause aberrations in the market. So that's why we do that. Currently, when you look at our summer purchases and our winter, we are about 80% hedged for the coming 2 years at a very attractive price. But the gas price has risen so much on that unhedged portion that we're here today seeking a rate increase to manage the commodity costs. Just to illustrate that, in that graph, as an engineer, I love graphs. I hope other people can like graphs as much as I do. But you'll see this line here. This is time along here, months of various years, and here's the price. You can see the seasonality with winter. This is where we locked in some prices. Back in our application we did in 2018. But if I was to look at those same prices today, the best I could do in the market is this graph up here, this line up here. So you can see that overall prices have gone up. And again, that is why we're here. Now, why have prices gone up? There's not one single reason. There's a variety of reasons they've gone up. We've highlighted a few on that chart. Certainly there's increased demand in North America for a variety of reasons, depending on how you came out of winter, if winter was colder. There's also a lot of natural gas now being used for power generation. The United States in particular has gone off of coal generation and moved to natural gas, and that has caused a significant increase in the consumption of gas. We also in North America have the advantage that we have one of the largest known reserves of natural gas in the world. Russia and North America are probably pretty good in that regard. There is so much natural gas that we can actually help the world by shipping it to them. Now you can't ship it on a pipe across the ocean. So what they do is they liquefy it. At the border or at the seaports, they will liquefy that natural gas, put it on ships for Asia. Asia doesn't really have a lot of natural gas they can get by pipe. Europe's pipelines are kind of constrained by Russia at certain periods of time. So they really desire these shipments of liquefied natural gas from North America and also from Australia and Nigeria, Trinidad, and some of those countries. That price has gone up to record highs. Our commodity price here in Saskatchewan is nowhere near record high. I remember doing this 15, 20 years ago when we were $8, $9, and $10 a GJ thanks to hurricanes that caused a lot of destruction in the Gulf. We just had a hurricane, didn't cause that much, but the price is up slightly. So what's happened over these things I'm telling you about North America and the LNG is natural gas, which used to be considered domestic and Western Canadian based or even North American based, has now moved global, like a lot of other commodities, like wheat, aluminum, iron ore. All those commodities that can be shipped now have a global market, and indeed North America has gone that way. The other interesting part about natural gas I mentioned to you is that we have this gas cost variance account where we accumulate differences between our actual price and what's being charged. We're going to clear that out. There's an amount sitting there. We need to recover that from our customers. Not going to do it all in 1 month or all in 1 year. We're proposing to lengthen that time period because we do recognize that we're in a situation here where every commodity that a homeowner is going to find, whether it's groceries, gasoline, all those things, there's inflation. And we don't want this to be an undue burden, so we want to play that out over perhaps a longer time than we might otherwise have done so. Natural gas price drivers. North America has seen in probably the last 15 years or so the least expensive energy in the world. A lot of that driven by technology and what I call shale gas. We've also experienced low prices in Western Canada because there are not enough pipelines built to take that gas to market, as to the LNG ships. Canada is yet to build a facility for LNG of any notable size. So the last 4 years, we have had the unique opportunity here in Saskatchewan whereby certain constraints in pipelines cause prices to go really low, and we've benefited from that. Those pipeline constraints are now removed. It's like I now have a highway I can drive on, people can travel, and that has given us that world market. Europe came out of this winter with very low reserves of natural gas. So I guess it was cool, and they've been trying to buy natural gas, been trying to buy more LNG. The price has gone up by a factor of 5, but Asia decided they wanted it more, and it went up by a factor of 8. So there's big competition for that gas, and as I said to you earlier, power plants, in order to reduce the CO2 emissions from coal in the United States, have virtually all turned to natural gas, and that trend has obviously caused increase in prices due to demand. The pandemic and related activities in oil patch have actually not increased our supply in North America. There's very little capital now for drilling, and a lot of the gas that's coming off of the shale gas in particular is associated with oil production. So there's a confluence of events that have increased the price, and there's a confluence of events that we did in terms of our price management strategy to keep that price to a very minimal amount. As I say, out of every dollar, due to our 80% hedging, customers might see 15 to 20 cents on that. So it's a good news story, but it's an increase, and we have to talk about that. If I now take that, all the things I've just said, and I translate that into customers, and let's remember that we have a variety of customer classes. We have residential. That means your home, your cottage. We have small commercial. Those would be the businesses that are, on a strip mall. And then we have our larger commercials, which would be perhaps a shopping center. And then, of course, the industrials, which I think that says it all. They're the big plants. They make fertilizer. They do oil. They do potash. Hospitals, things of those are classified there. Although the commodity goes to the same number of the $3.15 a GJ, they use the gas more year-round than a residential. So their bill impact is going to be a bit different. In residential, because it's only really used for the most part in the winter, outside of the water heating, which is continuous, we use far less gas on a uniform basis. So the increase for our typical residential is going to be $5.65 a month. And if you take that over a full year, you can calculate that. But it's about an 8% increase in your annual costs. Not a large amount, but it's meaningful, and we want to make sure that we get it right. We want the panel to adjudicate to make sure that we get it right as well. people always say, okay, well, that's your story. What's the story across the rest of Canada? As I mentioned, the rest of Canada changes their rates either on a monthly basis or on a quarterly basis. The ones that are the highest right now, and you can see Regina, Saskatchewan, we have the lowest current rate of any of the utilities in Canada. You can see our proposed rate, which would still be lower than all the ones that have put in for their monthly ones currently. We'll see how that ramps up over the winter period. I think we're going to fare very, very well on that regard. Toronto, I believe they do theirs on a quarterly basis and have yet to update from the lower summer prices. So overall, we will have a very low commodity rate, very competitive in all the jurisdictions. So we're pretty happy about the price management strategy we have in place. We've had that in place for 15 years. It served us well through the ups and downs, and this is going to serve us well in this period. So thank you very much for paying attention. If anyone's there, hope you are, and be happy to answer any questions that come in through Facebook and other forums. So thank you very much.
Thank you very much, Ken, for that presentation. I think that should give all of the people watching at home or wherever they might be a chance to understand a little bit more about natural gas that's delivered and priced and so on to their home. I would like to thank everybody for tuning in and hope that, again, that you're able to understand a little bit more about this application. I'll just say a few words about what the panel's role in this is and how this meeting and so on will be used by the panel. The panel is directed by an order of the minister in charge of the Crown Investments Corporation and SaskEnergy to do a review of the rate application that's been put forward by SaskEnergy. Although there are several terms in this document, basically we are to provide the minister with our opinion on the fairness of the proposed rate application under a number of criteria, which include the interests of the company, because we want to have SaskEnergy around to continue to provide us natural gas, also the public and the customers, because we have to protect the interests of the ratepayers who up there, as you saw, the ones that actually pay the bills. We must also consider the relevant industry standards that SaskEnergy is using compared to the standards, and as well as the competitiveness with neighboring jurisdictions, which you saw up there. Part of our mandate is to seek public input from stakeholders in general. We have done so by asking the public to comment through our website and through emails or phone messages. Our plan is to complete our review taking into account all of the responses as well as the application and the presentation tonight and any further applications or communications that we might receive up to our deadline, which is September 30th. So it's a week from today that people have a chance to make comments or concerns known to us. We will be working with our consultants to come up with our report, which will go to the minister by a final deadline of October 13th, which will allow SaskEnergy to adjust their rates effective November 1st. In the meantime, you can go to our website, which is SaskRateReview.ca, to monitor all the questions and the application and so on that is posted under the SaskEnergy portion of our website, and see whatever responses are again. Again, I want to thank you for coming, and thanks again to Ken for his presentation. And with that, we'll wrap it up. Thank you very much.
Nobody sent questions in?